And good morning, good morning, good morning, good morning. Welcome to the Nabwic National Association of Black Women in Construction Investment Club meeting.
And good morning, good morning, good morning, good morning. Welcome to the Nabwic.
So today we're hosting our Education Tuesday. And our first presentation, we're not recommending any stocks. We're not suggesting, this is just an investment club education where we're talking about different stocks and we are encouraging all of us to learn more in order to earn more. So our first presentation this morning will be done by Ms. Doretha.
Good morning, everyone. So good to be here this early in the morning. The first stock I want to present is Air Lease Corporation. The symbol is AL. Our club has 25 shares, and Air Lease is a rental and leasing services. It is in the industrial sector. It's a medium company, and Morningstar has rated them for their financial health as a C. They provide dividends of 1.49%. The price today is $59.02. We purchased it some time ago at $57.61. So the value of the stock has grown some. The quarterly revenue, which ended March of 2025, was $738 million. They'll have their next conference call August the 4th to give us their second quarter earnings. Today, I'm recommending that we hold this particular stock. There hasn't been a significant change in it. And Value Line didn't have a recommendation for it. So I'm going to recommend that we continue to hold this particular stock. It does have sales percent, sales as 9.2%, earnings per share, a negative 21.1%, and REO, which is a return on equity, 5-year average of 5.1%, and debt to capital ratio 72.6%. Now we see two significant pieces happening here. The earnings per share is in the negative, and the debt to capital ratio is 72%, which we never recommend. We recommend that it's no more than 50%. However, when we look at this type of company renting and leasing aircraft, we find that the volume that they buy in is extremely high, and so it keeps them in a high debt ratio. Okay, let's move to stock number 2 for me, Amazon. The symbol is AMZN. We own 10 shares of that. It is an internet retail services. It's part of the consumer secular sector. Morningstar rates them an A, and they are a large company, more than 10 billion in sales. My recommendation for them also is a hold. Their sales, average sales, 22.8%, earnings per share, 22.2%, return on equity, 18%, and debt to capital ratio, 42%, which I mentioned earlier is less than that 50%. We bought them at $205 a share. Today they are $223.47 a share. Their quarterly earnings, 155 billion, and that was as of May of 2025. Their next report will come out August of 2025, and of course we will be looking at that particular stock at that time. The next stock I have is Cactus. The symbol is WHD. We own 20 shares of that stock. My recommendation for them also is a hold. We bought them at $41 a share. Today, the price is $43.89 a share. Their sales average, 5-year average, 20.4%. Earnings per share, 59.9 per share. Return on equity, 16%. Debt to capital ratio, 5.6%. They do offer a dividends of 0.13% per share. I love their debt to capital ratio. They managed to keep that really low. They are a medium company. They are in the oil and gas equipment and services industry. The sector is energy. Morningstar gives them a rating of B. My recommendation again is to hold. The next stock is Qualys. The symbol is QLYS. We own 5 shares of that particular stock. Today, the price is $146.94. We bought it at $138.55. Their quarterly revenue, 159 million over last year, which is up 9.7%. Their next earnings date will come out August 5th, 2025. I will be checking that out. Most of the analysts recommend a hold. Value Line recommend a hold. And so with me too, I will recommend a hold. Qualys is a cloud security and compliance solution provider. They are a small company. The industry is software infrastructure. Their sector is technology. Morningstar gives them a rating of 8. Their debt to capital ratio is 10.3%. I love that. I always like when they have low debt. Their earnings per share is 30.4%. Earnings per share 29.2%, and their sales is 15.7%. That's a 5-year average. And again, I recommend a hold. Those are my 4 stocks this morning. I believe Miss Sharon Jackson is up next.
Thank you, Doretha. All right, Sharon or Carolyn or Nicole.
Thank you. I'm trying to get off camera, so excuse me. All right. So good morning. My name is Sharon, and my stock is Proto Labs. Let me see if I can't share. Tell me when you can see.
Not yet, Sharon, not yet.
Okay, thank you. That's interesting. All right, well, Proto Labs is it's a the industry. Now are you seeing?
Yes, we are.
Okay, very good. And I'm not sure why you're seeing my whole presentation, but that's okay. So Proto Labs is the sector is industry. It is a small company. Morningstar gives it a financial health of a B. It is an on-demand manufacturing of custom parts for prototyping and short-run production. The company offers developers and engineers quick turn production service to reduce the time to market. So as you can see, it uses molding computer numerical control machines and 3D printing to manufacture custom parts for customers. Now, let me show you this, please. Okay. I'm not sure what is happening with my computer this morning, so you're going to have to apologizing. So let me change screens, please. Maybe that'll be helpful. Okay, I'm changing screens. So when you look at the first screen, this is the first screen to analyze growth and quality. And this is Proto Labs. This is them for the last 5 years. Normally, when you review something on this one screen, that tells you under normal circumstances, you don't need to bother about going to the rest of the screen because this tells you everything. Their historical sales for the last 5 years have been flat. Their pre-tax profit is going down, and so is their earnings per share. Okay, we like the goal. The first thing that you hear from Better Investing is up straight and parallel, right? So right now, none of that is in play. Okay, so under normal circumstances, if we were looking at Proto Lab for the first time, we wouldn't even bother going on. It's just not happening. Their issues, they have had a number of issues in the last several years, and they just have not been able to come out. But anyway, we're going to go on with the review. So in looking at value line and such, right now the growth is only at 2.6%. In the next 5 years, I went ahead and projected and looked at the sentiments too, and looked at value line and others, and I projected a 4.5. In historical earnings per share, they have been, I think you can see it on here, it is like in the negative. Looking at Value Line, the others, they're saying that they have been really revising their business. They've been restructuring. They've done a lot. So, but the forecasting still looks bad. But it does look like they're going to bring it out of the drink. So I gave it a 1.6. When you look at their debt to capital, they have pulled their debt down a lot. Their return to equity has been increasing, and their pre-tax profit on sales, that's came back, but now it's slowly going down. So I have given it some, but right now I'm already, I'm gonna recommend selling. But that's what we've done. So for valuation, We went to the high PE. The high PE, I gave it a forecasting of 441.6, and the low PE, I gave it a 36.3. Okay, that would on your potential gain versus loss. The current price is already $40.07. That's the current. It's right in the middle of the sell zone. This is one of those things that we would need to sell it. Watch it because they are restructuring, because they are bringing the company back. But right now, there's nothing that you could say that would make it a hold. Their shares are down 12% in the last 2 years. But even Value Line is saying the appreciation projected out to 2028, even to 2030, remains below average. So my recommendation is to sell all of our shares. That's my presentation. I'm gonna tell you I had a longer presentation, but I couldn't. There was nothing about this company. Everything was in decline and has been in decline. And while they are doing better, while they are making progress in integrating the acquisition of 3D hubs, aiming to create a comprehensive digital manufacturing offer. They are repurchasing stock, but still, there's still a decline and there's much more to do. We've lost a lot of money in Proto Lab, not looking at this diligently. So rather than continuing to lose, as they restructure, when they bring things around, we can rebuy. But right now, my recommendation is to sell each one of our shares of Proto Lab. Any questions? Am I on mute?
No, you're not on mute, and I have no questions, and I agree. Okay, who's up next? Is it Nicole you're going next or Carolyn?
Good morning. I will go next. I'm already on the job site, and I wasn't aware that we were making presentation of the stocks, but I do have something to present to the education of the for today. I went ahead and reviewed the in the Better Investment August 2025, page 10. It spoke about the 529 plan. And that 529 plan is a tax advantage savings for educational expenses. The fund, when it grows, is a tax-free, and when it withdraws, it's also a tax-free that's used for qualified education expenses. It covers college, K through 12 education, some apprenticeship, and now since they have a change in the RS code, you can the students, you can repay your loan up to $10,000 using the 529 plan. And started in 2024, the unused funds can roll over to the to Roth IRA, or for example, you might set up the account and your child or grandchild decided not to go to college. It can roll over to the siblings, or it can roll over to a family member. The key rollover rules is a lifetime rollover of $35,000, and at least you have to have the 529 plan at least 15 years prior to the rollover. So the best thing to do, I think, is to start now. So in case that time comes to rollover, you meet that criteria of the 15 years. What is new about the benefits? It increased flexibility. It avoids penalty and taxes with the unused fund. It encouraged early savings. Tips and takeaway. Start early to make your 15 years holding roles. Plan beneficiary changes because you can make changes to the plan. So in case you have your child and for some reason you want to make a change toward someone else, you can also do that. And my final thought is that the new 529 plan update gives family a peace of mind because even the original purpose can change and the savings can be rollover and still be tax-free and support your child in your financial future. And that's my presentation for this morning. Thank you.
Good morning, ladies. I'll go ahead and share. So I looked at my three stocks were Gildan Activewear, Jinko Solar, and Lennar Corporation. I'll start with Gildan Activewear. The ticker symbol is GIL. Gildan Activewear is an equity in the U.S. market. At the time of the study, which was July 3rd, the price of the stock was $50.64, which is currently a change of less than 1% from its previous close price. The latest open price was $49.99. Which was at the time of the trade on Thursday, July the 3rd. The sector for Gildan is consumer discretionary apparel manufacturing. It has a market capitalization of roughly $7.6 billion. It manufactures t-shirts, sweatshirts, socks. It's a mass retailer and wholesaler, and it has a high margin value in its apparel category. In August of 2018, we purchased 11 shares of Gildan at approximately $29 a share. Again, the price now is $50.64, which is up roughly 75% since its purchase. Dividends are produced quarterly. It's roughly 1.8% yield, which is about 23% overall. As it relates to its growth, analysts are expecting 9.4% annual growth. Revenue is going to be around 4.7% growth. The current PE, or at the time of this study, was roughly 13, which puts it at a 2.4% price per share. That's a reasonable value for it, and it's providing a solid yield. As a steady, well-valued dividend grower and a long-term growth stock, I currently recommend a hold. And this is mainly because of the dips in the yield over its long-term growth. It's probably going to even out. And so my recommendation for Gildan is a hold. Any questions? My next stock is Jinko Solar. Jinko Solar's ticker is JKS. Jinko Solar is in the industrial or technology sector, specializing in solar energy and equipment. It currently has a market capitalization of $1.2 billion. It's a Chinese solar panel maker with key tech investments and recently high paid dividends. The current price of Jinko Solar at the time of this review was $24.33, which is currently a change of 0.83 cents since its last previous close. So it's up just a bit. The latest open price was $24, which was as of Thursday, July the 3rd. We purchased 10 shares of Jinko Solar in August of 2020 at a cost of $25 a share. So now the price is $24.33, which is slightly down, about 3%. But we expect a modest recovery, considering it's not a significant loss. Jinko does pay a dividend of $1.30 annually, which is about a 6.5% yield on the shares we own. And they also pay semi-annually dividends at 32.5 cents per share. The dividends may be generous, but the earnings are unstable. There's high market volatility, specifically as it relates to the technology of the solar panels. It seems a bit promising, but it is cyclical. And also, because it is an international company or a Chinese company, there's a lot of policies and regulation that causes a risk for investors. The yields compared to its peers are pretty high. But again, the income is very risky and unstable. So, but if you're comfortable with this volatility, I would consider continuing to hold. Otherwise, my recommendation would be to sell. Any questions? My last stock is Lennar Corporation. The ticker is LEN. Lennar is also in the consumer discretionary sector, focusing on home building and construction. It has a market capitalization of $29 billion. It's one of the largest U.S. home builders, specializing in diverse residential building, mortgage, and title services. And it's a spinoff from Millrose Property. We purchased 10 shares at $110 per share in July of 22. The current price is $110.56, which is essentially a flat increase since its last purchase. Lennar does pay dividends of roughly $2 annually, or 1.8% per yield. It recently increased its dividends since the last 2 years. It's fairly valued with a 50 to 80% intrinsic value, but the earnings forecast is set to decline, almost 7% over the next 3 years. The housing market right now is very soft. The interest rate exposure is causing slow build and development. And then the spinoff that they did with Millrose Property is becoming a little bit more complex. Although the dividends are stable, the growth is in the headwinds. My recommendation is that we keep it, we put a hold on it, specifically for the income outlook, and hope that it improves a little bit greater than the 7% over the next 3 years. But we should carefully watch it for any dips or trends, and possibly consider selling if the housing market weakens further. I also have one additional stock, which is NICE Limited. The ticker is NICE, or NICE, sorry. The sector is technology, software. The company has a market capitalization rate of $10.7 billion. NICE provides AI-powered CX and digital business solutions globally, and it invests very heavily in research and development. It doesn't currently have any dividends as it's reinvesting all of its profits. The recent market close was $170.04, which is a change of $1.64 from its previous close. The last opening price was $169.42. We purchased 5 shares of NICE in December of 2024 at $165 a share. That's a 3% increase since the last 7 months. With no dividends and the focus almost exclusively on growth and its heavy investments in research and development, the next quarter sales are projected to be $713 million. So that's going to free up some cash flow, and it's probably going to give NICE a premium valuation, but the future growth of the company is still going to be in slight decline or modest at best. The growth that the company is gaining through its reinvestment is not cheap. Although it's a quality tech stock and with steady trends and growth and very strong fundamentals, I would recommend a hold, especially if we're seeking to grow in the tech sector, and possibly consider adding additional stock if the income becomes a priority. Otherwise, we might want to look at a different company in the same sector. Any questions? So again, my recommendations for Gildane is a hold, or if it meets our requirements, to add additional stock. My recommendation for Ginkgo would be to hold or to reduce. Lennar is a hold, and NICE is also a hold with possible considerations to add if it meets its criteria. Any questions? All right, thank you.
Thank you. I have a question.
Yes.
So it's more about, are we going to wait? It sounds like this is really a full meeting rather than just education.
Mhm.
Are we going to wait? Can we take a vote to sell or purchase now? I guess this is to the whole group. Are we will? Is there a reason why we should hold on to my stock, Proto Lab, for another month? Or I'm just not sure if we're in a financial situation, but if at all possible, if we can take a vote this morning, I would, can we take a vote this morning? Because I recommend selling all of our shares of Proto Lab. I wouldn't bother waiting another 30 days to hold on to it.
Sharon,
I think if we have a quorum.
Okay, go ahead. I was going to say
No,
we do have some of our members that are not here this morning.
But
We,
Aretha,
we may have a quorum, but we do have some that are not here. Also, we have an executive meeting coming up. Perhaps we can move this to next week when we have our executive meeting.
Aretha,
Yes, ma'am.
and everybody, this meeting is actually taking the place of last Thursday's meeting. So it is like Carolyn was saying about, this is our education meeting, but this meeting is taking place for our regular meeting that we were going to have last Thursday. So it is our regular meeting. I'd like to
Okay.
suggest, based upon, yes, and we do have a quorum, just have to make these actions before Carolyn has to leave and Sharon has to leave. But I like to, because I'm gonna, when I do my stock, I'm gonna also suggest we sell. And going to Sharon's point, what we can do is we can go ahead and make the recommendations and then we can take the action on Tuesday. But just so that we, because we do have a quorum and this is a quasi-regular meeting. So, but every day and every month we delay, some of these stocks have been plummeting for months. But we do have a quorum.
Okay, Sharon, you're gonna make a motion?
Should I wait until Anne makes her presentation and then after we've heard all of them, we can take a motion on all of them because I'm not sure if Nicole had a recommendation to sell also. So let's just hear Anne's presentation and then we can take motions after that. Is that okay with everyone?
Yes, that works.
Let's go.
All right, not sure if everybody can see the screen.
Yes.
Okay. All right, so this was a stock that was recommended that we, we look at dividing up. I'm gonna start at the back and work backwards. So after doing the SSG on Primrose, it is a sell. Now, I wanted to do just since this is education and it is our regular meeting semi, if you will, I wanted to go back and look at the tool SSG. And my desire is to mix this presentation with surfing and searching the actual SSG tool. And a lot of the information that is here that normally, I know I don't normally use it. I'm not sure about the rest of you, but let me just go here. Okay. All right. So I wanted to start with this stock by going to, and I'm not sure, can you see my cursor on the screen?
Yes.
Oh, okay. Yeah. So what I wanted to do, I wanted to start by going to what does Better Investing Company Research say about the stock. So Primrose Services is a provider of infrastructure services operating mainly in the United States and Canada. It provides a wide range of construction services, maintenance, replacement, fabrication, engineering, and a diversified base of customers it has. The reportable segments of the utility segments and the energy segment. The utility segments operates in a range of services. I'm not going to read all of that. But what I thought was interesting is that as I just kind of searched around the tabs in doing the research to make this presentation, it was an enormous amount of information that I found. So right now, we can see that this company is an industrial, and the sector is industrial. The industry is engineering and construction. The capital structure, it shows that it has 5.38 outstanding shares, all of the details here. The present price is $85.13. The annual financial history, I'm not going to go through all of this, but just wanted to just share, because traditionally I just do certain things and then that's it, and then I'm done with the stock. But as I began to just look at what does the Bet Investing tool share with us in terms of how, let's see, I want to go to the analyst estimates. And I use a number of different analyst estimates, including the sentiments, to determine the numbers that I would use in the research. And I'll just go to what Yahoo says in this research. Okay. Now, I wanted to also go to the news. Now, even though I'm going to suggest that we sell this stock, right now in the news, this company, we can see that Meta has been, Primrose Services, does it have what it takes to be a top stock pick for the moment? And then it goes into let's find out. Now, in reading some of these articles, it just continues to confirm that we've missed an opportunity and we should consider selling it. Here it says momentum investing is all about the idea of following a stock's recent trend, which can be in either direction. In the long context, investors will essentially be buying high, but hoping to sell even higher. And for investors following this methodology, taking advantage of the trends in a stock price, once a stock establishes a course, is more than likely to continue moving in that direction. Now, going back to the SSG, the trend is showing that it is basically starting to flatten out. And I'll just go through what my forecast projections were. For the historical sales, I chose a growth rate of 7.1, utilizing a mixture of the other numbers in terms of an average. The historical EPS, the forecast I chose was 8. The first one was 7.1, the second is 8.1. Go to the, let me just go here. And we can see that based upon the trends, that the percentage of pre-tax profit on sales right now is showing an average of 3.8%. But as you can see, from 22 is down, 23 is down, 24 is 4.0, but the average is a 3.8 on pre-tax profit on sales. Percentage return on equity is also showing down in terms of an average, 12.6%, and the percentage of debt to capital is at a 48%, which is an average of 48%, which is a little high. Now, for the backside of the SSG, I chose, okay, current price, 5-year, 5-year price earnings ratio is 12.5. The current price earnings ratio is 22.5. I chose the high PE at 17.0, and that gives us a forecasted high price of 94.9. Similarly, with the forecasted low price, I chose an average low price PE of I chose a low PE of 7.9, which gives us a 29.9 forecasted low price. And based upon the SSG, it is a sell. But any questions for me on this stock?
Not on the stock, but I want to thank you for showing us, because I have gone to that tab and never bothered to look at all of the data. I have been going to the Yahoo Finance outside of BI, and this will save a lot of time. I'm just going to thank you for doing that. That was great.
Yeah, thank you, Sharon. I didn't want to take up a lot of time because we did say 3 minutes. So the other the other stocks that I have, I'll share those when we meet again. But I went through each of those in preparation for this, and I didn't do the presentation for all of them because we're already at about 10 till the hour. So not sure if there was anything else from the education committee that we wanted to share. I'll go ahead and stop sharing this. And for those individuals who are listening, we are a part of the National Association of Black Women in Construction. This is our investment club. That's a part of Nabwic. And as a part of that, we meet on the first Thursday to have our regular meeting. And then we meet on the second Tuesday to have our education meeting, which is today. Now, if anyone is listening to us and is interested in participating in our investment club, you can go to National Association of Black Women in Construction website. That's nabwic.org, and you can get more information about our club, nabwic.org. This is an education club, investment club, and we're not recommending any stocks, and we're not recommending any buys or sells of anything. This is just purely for education purposes only. So with that thought, Doretha or Sharon or Nicole, if you have that that statement that we said we were going to share as a part of our presentations, if you have that, we can share it. And if not, we can go forward for a recommendation to close this meeting. Anybody?
Was it to close the meeting, or are we going to take a few minutes to make the recommendations?
Yes. Recommendations.
Okay, so I was first, and I am proposing that we sell all of our shares of PLRB, Proto Labs. And I guess we'll take up the vote at our next meeting, if that's what we're going to do, but definitely.
Yes.
That is my recommendation, to sell PRLB.
Okay, and I'm also recommending that we sell Primrose.
Nicole, did you have recommendations to buy or sell?
No. I think all of my recommendations were essentially hold or increase at this time.
Okay, so you're not making any recommendations to increase, you're gonna wait.
Yeah, I'm gonna wait.
Totally fine.
Thank you.
Doretha, did you have a recommendation to buy or sell?
No recommendations at this time. Everything I presented, I want you to recommend that we hold.
Okay, very good. So right now, we are taking up a recommendation to sell Primrose and to sell all our shares of PRLB. All right, and then we're going to actually act on the motion at our executive meeting.
Correct.
Okay,
Yes.
very good. That's what
Correct.
we're gonna put. Okay, is there any other discussion for this?
Okay, Carolyn, just for the record, I'm going to read what Carolyn says. She didn't make any stock presentation, but all of her stocks are a hold, just for the record.
Awesome. Thank you for that, Carolyn. All right then. And we're going to turn it back to you because this. Oh.
Okay, well, with those thoughts in mind, our minds and hearts clear, we're gonna go ahead and recommend, ask for a motion that we end this education meeting, and then on our executive meeting, which we'll do next week, we will take up the actual transaction to sell those stocks. Can we get a motion to dismiss?
I'd like to make a motion to adjourn the meeting.
I second it.
All right, so we have a motion from Nicole, second from Aretha, and all in favor say aye.
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 All right, the meeting is
Aye.
dismissed.